Hi, this is Michael Rony Mullick, and you are watching the Week Ahead show. So let's discuss what happened in the previous week, some highlights of the week. So highlights, nothing much to say. The markets continue its bearish journey, and last week we did see the US height as expected. It was uh, inflated by almost 0.75 percentage or 75 basis point, and the US market very interestingly did not react negatively that same day. But the following day is where we saw the true reaction in the US markets. Everything started falling, especially on Thursday. The Wednesday it was discussed in the US, and Thursday in Indian time at 1 p.m. the Switzerland came out with its interest rate hike decision, and this is the first rate hike in Switzerland in the last 15 years. So in Switzerland, actually the interest rate is in the negative, which means if you keep money in the bank, you are supposed to pay the interest rate to the bank instead of the bank paying it to you. So it was at 0.75 percentage in the negative in the Swiss interest rate, and it was hiked to 0.25 percentage negative. So minus 2.5% is the current rate in the Switzerland, and it is hiked for the first time in 15 years. And we know that the Swiss economy is a very strong economy. So overall things look very, very bearish in the markets, and that is when the markets fell drastically. Nifty broke its very, very important support level of 15,670, and then there was a one-way journey in the markets. And on Friday, the market opened again slightly gap down, and it had a panic low in the first few minutes. It touched 15,183, and from there it reversed a bit, but over the day it consolidated on the most parts. So Nifty looks bearish. Bank Nifty not that much bearish. It did not fall to that levels because when the markets were falling because of the US-Ukraine crisis, so that time when Nifty was at 15,670 levels, Bank Nifty was at 32,000. Now the Nifty has fallen further, but Bank Nifty is still taking a support at 32,000. So banking sector is slightly strong, and in the US, things look very bad. Nasdaq has fallen more than 35%, S&P 500 down by 25% from the top, and Dow Jones, it is almost close to 20% in the from its top. So all the US markets, all the major indices are now in the bear territory. So bear market has started in the US, and let us see what happens in the days ahead. So we're expecting bearishness in the market, but Friday's closing, in the US, it was slightly on the positive side. So Nasdaq was positive, but the Dow Jones was still slightly in the negative. So it was a mixed reaction from the US, and US markets are having a holiday tomorrow. So again, nothing major coming from the US end. So the markets are likely to remain in a close range. It will be consolidating for the next few days at least. And on Wednesday, maybe we will get to see a proper reaction in the markets. So this is how the markets are looking right now. So there is a hope. The only hope is the crude oil prices have fallen actually. So that is something good. So let us quickly get into the charts and see the real picture, what's happening in the markets. So this is, let me open up the chart for Nifty. So Nifty, you can see this, if I pull up the weekly chart, Nifty has had one of the worst weeks in its recent history. It is down by almost 5.5% in a single week. Bank Nifty, same. Bank Nifty is also down significantly in the last week. And coming to other things such as the US markets, and US markets, if I show you the charts of Dow Jones, so it has fallen for the last 12 weeks consecutively, barring just 1 week. So out of last 12 weeks, it has fallen 11 weeks, and only 1 week it ended in the green. So that is the kind of bearishness we are seeing in the US markets. Then this is the Dow Jones Industrial Average, the DJIA index, which I'm talking about. So things look very, very bearish, like I told you, in the US markets. But the US VIX has fallen slightly, almost 5.5% yesterday, but it is still above 30. It is at 31.2, which is still on the higher side. India VIX is, although the markets are falling, the India VIX is not shooting up because people are expecting a fall, and many people have created short positions. So, and the markets are actually going down. If there's a zigzag move, that is when the VIX will shoot up in the Indian markets. Right now, the VIX are slightly higher at 22.75. So this is the India VIX. Now crude oil prices, like I told you, that is some good news. We are seeing the crude oil prices are coming down significantly. It is at $110 right now. So $110. This is, again, there is two ways to analyze this. So what are the two ways? One thing is, since crude oil prices are coming down, we can expect that the inflation rate can come down, because we know everything is dependent on crude oil. Whatever is happening worldwide, a lot of that depends on crude oil, and if crude prices rise, everything will rise. So crude oil prices coming down, that can act as control against inflation. And another way to look at this is, since everything is rising, the demand for crude oil is not there that much. People are not buying oil, and that is, the demand and supply mismatch is causing a fall in the crude oil prices. So that is the two ways to look at it. So that was crude oil. But one thing, the next asset we are looking at is very interesting. It's cryptocurrency, apparently. So cryptocurrency, all those who have invested in cryptocurrency, they are facing a very, very challenging time, because the Bitcoin, which we consider as an equivalent to gold, and cryptocurrency, the Bitcoin, if you talk about its fall, it has fallen from 69,000, which was its high, and from there it has fallen almost 74%. And on Saturday, very interestingly, it fell to almost 17,600 levels. So you can imagine Bitcoin falling like that, which people were really banking on, the crypto enthusiasts and everything. Now you see no one is talking about cryptocurrencies anymore. So this is the markets. Bitcoin is down and Ethereum is down. So Ethereum at one point, it touched 3 digits. It was at a low of $880 on Saturday. So why we are talking about cryptocurrencies? It is because we know that the global assets, the global markets are all connected. So once you see one asset class like Bitcoin, let's say it's falling drastically, so people who have invested there, what will they do? They will sell shares or other things that they are holding, maybe real estate, gold, or whatever it is, and they bring that money to buy more Bitcoin, so that their average comes down. So that is why a panic in one asset class can create a panic in other asset classes like equity markets, gold markets, and real estate markets, like that. So this is why we have discussed cryptocurrency, and the fall of cryptocurrency is not good. In a matter of 2 days, it again fell 20%, which is actually scary to see. So that is the kind of fall. So talking about Ethereum has fallen almost 82% from its high. So you can imagine Bitcoin and Ethereum are considered one of the top cryptocurrencies, and they are falling 70-80%. So absolutely not expected by the people. So things look very bad on the cryptocurrency front as well. Now talking about the dollar index, we know that dollar index and the markets, they are inversely proportional. When the dollar index shoots up, what we see is that the equity markets come down. So dollar index had shot up dramatically to 105, but it again cooled off a little. But on Friday's trade, it has ended close to 104.65. So nothing positive coming from the dollar index end as well. USD INR is at 77.8. Again, it is on the higher side, but it is stabilizing. Maybe the RBI is trying to control the the price stability of USD INR. So it is at 77.8, and it is where it is stabilizing for the few days. And this is concerning because if you see that the selling from the FIIs, so it is 7,800 crores of selling just one day. This is the 17th of June. The Friday's trading session, they have sold for almost $1 billion. So with this kind of selling, and when you see that these foreign institutions are selling and they are taking money out from the Indian markets, the Indian rupee is likely to weaken. It is now at 77.8. It once shot up to 78, 79, 80. So we won't be surprised if that happens in the coming days. Now for investments, the gold prices have not shot up so much. So maybe if the fall continues, we can expect the gold prices to shoot up. So maybe investing in gold can give you some kind of hedge or some kind of return when everything is down in your portfolio. So investing in gold in SIP format or whatever, you can buy gold bees, which is an ETF product, you can buy SGB, sovereign gold bond. So those things you can buy to make sure your downside is slightly protected. Obviously you cannot have a complete hedge, but at least something is better than nothing. So you can look to invest in gold in the coming days, because it is likely to go up if things continue to be bearish as it is right now. So talking about next week's events, there are two events that you can watch out for. Again, nothing that important. On Wednesday, we have the inflation rate coming from the UK. It is for the month of May. So what is the expectation? The expectation of inflation rate is from 9.1 to 9.2 percentage. So if the inflation is higher than that, again, we can see that the markets moving even in a bearish trend. It can break 15,000 as well. And at 9% was the month of May. So let's see what happens on Wednesday. This is at 11:30 a.m. within the market hours. So that is something to watch out for. And the next event you should watch out for is on Friday, 24th of June, the Japanese inflation rate will be coming at around 5 a.m. in the morning. So 2.3% is the forecast, which is slightly less than the month of May. So month of April. So month of May expectation is 2.3%. So let us look at that as well on Friday. So these are the two things which we can be watching out for in the next week. Talking about levels for Nifty and Bank Nifty. So talking about Nifty 23rd June expiry, we can see that 16,000 is a huge amount of call OI, which means people are expecting the markets will not be breaking 16,000 by next Thursday, and followed by 15,700 having the second highest amount of call OI, because we had seen the markets reversing multiple times from 15,700, and since that was broken, now that will be acting as a very, very strong resistance level for the markets. That is why people have sold so much of call options at 15,700. On the downside, we are seeing 15,000 as a strong support for the markets. So let us see what happens on that end. So 15,000 is something, a very, very strong support in Nifty, and the put call ratio is at 0.56, and so things look very, very bearish in Nifty. But in Bank Nifty, things look slightly positive, because we see 33,500 having a good amount of call OI, and on the downside 32,000 is again having a strong support. So the PCR is slightly stronger than that of Nifty. It has 0.76. So as I told you, Bank Nifty looks stronger than Nifty. Now the charts in Nifty, the levels you should be watching out for next week is the levels we have talked about multiple times. This time, since 15,700 has been broken, so you can consider 15,670 to be a very, very strong support level, resistance level on the upside, and 15,000 to act as a strong support on the downside. So either these two levels. So I expect the market to trade between 15,000 to 15,700. This 700 points markets will be volatile in the next coming days. If either is broken on the downside or the upside, only then we will take a bullish view or a further bearish view in the markets. So this is the Nifty levels you should be watching out for. Bank Nifty, as I told you, it's very strong at 32,000. So 32,000 should be watched keenly, and we should see what happens at 32,000 levels, because if that is broken, you can expect the markets to be very, very bearish in Bank Nifty. And on the upside, we have 33,500 and 34,000 as the next strong level of resistance in Bank Nifty. So some of these stocks that you can watch out for in the next week is obviously the banking stocks. The banking stocks look strong, and let us see if they can outperform the markets. And also you can look at the IT sector. The IT sector is completely sold off, and since the Nasdaq slightly ended in the positive on almost 1.5% in the green, we can expect some slight recovery in the IT stocks. But slight recovery does not mean it is bullish. It can be just a bounce from the while going down. So that is something to watch out for in the next week, banking and IT. And also, since we talked about the crude oil coming down is bad for Reliance. So Reliance could be under pressure. It is significantly down from its top, and if the crude oil prices continue to go down, we can expect bearishness in Reliance as well. And we know for Nifty, banking, IT and Reliance, they almost have a combined weightage of almost 60%. So we will see how these three sectors perform, and how the things look in the market in the next week. So we have discussed the levels. Let's see the comments. Okay, we have a comment from Siddharth Snehal, and he's saying the portfolio is all in the red. Yes, obviously the portfolio, everything looks very, very bearish in the market. So everyone's portfolio is in the red. So there are two ways you can do. If you're an investor, obviously you can look to acquire good quality stocks, the blue chip ones I'm talking about, at this fall, and you can average down your portfolio. Or if you're again not that savvy of an investor, you can just close your eyes and buy Nifty Bs. It's a Nifty ETF because we know the markets in the long term always are on the upward trend, especially India. India is a growing economy, it's a developing country, so expect the Nifty to go up. So you can just close your eyes and buy Nifty Bs every time the markets falls 300 to 400 points. So that is what you can do. And if you are a trader, obviously you can use short positions. You can create some kind of using options. You can use futures, but obviously you need to be hedging your positions and not keeping a naked position overnight, because things can change dramatically overnight. So yes, if you're an investor, I think that is the safest way. Just keep on adding good stocks at these lower levels, because when the market rallies, you will not be getting a chance to get these good quality stocks at a cheaper level. So yes, portfolios are in the red. Everyone's portfolios are in the red, and this is the only way you can survive the markets in the long term. So hopefully I've answered Siddharth's question. I'll since there are no more questions, I will end the live stream right now, and hope to see you tomorrow at the pre-market show at 8:30 a.m. in the morning, where we discuss about how the Asian markets have opened. We know the US markets are closed tomorrow, so we will look at Asian markets and how they are reacting to the global news. And so with that, I'll join again for the pre-market show tomorrow at 8:30 a.m. But till now, that is all I have. Have a good night, and thank you for watching.